Greetings, market rebels. Welcome to this week's macro measure. It is also joined by the sector situation video combo yet again. Going to be this way for a while. Anyway, it's Sunday, March 23rd, 2025, and it's about 9:30 a.m. here on the East Coast. I'm Wayne. Here is the trusty Market Rebellion disclaimer. Here is the trusty Market Rebellion intellectual property rights notice. And here is a snapshot of last week's notes that we tried to put together that we referred to as Relief Rally Attempt 3. Yet another one that really wasn't that impressive. So I'll leave that up just for a moment, but I don't think I'm really going to review much because I'm extremely short on time and I'm probably going to make a longer video than I hope to when we get into the new stuff anyway. But that's a good reminder there. I think we did get a relief rally attempt that was a little bit better than some of the other ones we saw for a while, but that kind of fell apart near midweek, started really descending from that point on until the gang put together a really late day sort of scamper, which was as cheesy as always is. Didn't really, I don't think it really reflected the day's activity, but that doesn't matter. Everything starts again fresh on Monday. Here is this week's slide, and I'm just calling it. I'm calling it right now. I can maybe save you a lot of time, but I'm going to go through things obviously anyway. I think it's a very tough call right now. I can make cases for some bullish stuff, and I can make some cases that are pretty bearish. And so when it gets that way, I've found that you're better off bringing nothing into that week in terms of your strong bias, right? You really want to have the most mild bias that you can. Um, if you can't trade that way, I get it. It's not easy if you have all these concerns or you think it's overdone, whatever the case may be. But I think I'm going to jump down to here on my notes. And the news neutral assumption that we make most likely scenario is again, trade what you see, TWYS. So that's what I would say. Trade what you see because there's too much. I can flip back and forth between, well, this looks pretty good. Well, that doesn't look very good at all. This is concerning. I can keep doing that probably for a few hours if I really wanted to because of all the different technical developments we've seen and the price action and the feedback loop and trying to discern what's going on. I try to listen to what the markets are potentially telling us. And I think it's a little bit of a mixed bag. We're pulling our old Austin Powers reference, and it's a little bit of a mixed bag juncture to say the least. So I think without that late burst of lipstick on Friday, it would have probably been a little bit worse too. But you have to see the charts to, I think, a little bit about this, that, and the other thing, and to see the charts and basically say, yeah, there's a lot of mixed bag type stuff happening right now. So I think you have to wait it out a little longer. And interestingly, I think that should happen pretty soon because this is the last trading week in March. And if the gang really wants to hold this market together, or if they want to take it lower, depending on your point of view, you really want to see it either improves very nicely, but in the final week, full trading week of the month, or you want to see it really fall apart. Because usually, right, if it falls apart, usually you have at least another month or several of struggle for the market, right? So if you're a bear, that monthly kind of conclusion can be big in a big picture sense. It can kind of create issues for the next few months, if not longer. And so if you want to avoid that, you really want to try to maintain the monthly charts looking solid still. And so those are on the edge. They're teetering right now. And I pay attention to the big picture charts, just like I pay attention to the short-term charts. It's all very important. But obviously, when big waves begin to unfold and there's a trend change in bigger waves, like a monthly, that can really be a problem. So I think that's where you're at, where you're at risk of that. And that's why I'm saying I think something should resolve soon, where you're going to either get another leg to the downside, or the long awaited, much anticipated rally, relief rally is going to finally kick into another gear, and we're going to get better lift than we've seen so far. And I think that's another reason why this is concerning, because we've had these persistently oversold, I would say bombed out conditions. Breadth got terrible. The sectors got annihilated. AAII is about the worst it's been on a streak in years. Some of the worst readings ever appeared. Um, all these types of things developed, and that really hasn't produced a great rally to this point. So I think on that note, I'll leave this up here. I'll try to scan it before we wrap up. Hopefully, everyone can uh, pick some of the things out of here and have an idea. Let me see if I can just highlight some of these things um, that I've already talked about that, but let's see. So I'm going to do the stream of consciousness. I'll try to cover as many things as I can inside of what develops. I would be high on DEF CON. Not that I do see a way out of this technically, but you have to be on high alert, because we're at a point right now where things can shift, I think, quickly to pretty nicely bullish for more of a relief rally, but also they could flip very bearish quickly. And of course, right, if you get to that point and it does shift that way, you still have to entertain the idea that it could be another false breakdown, that type of a thing, right? Or a final clean out a lot. So a lot of different scenarios can unfold. So we'll try to mention those. So yeah, we're going to stay the way we have been. These are all just summary points that I've been kind of rolling from week to week that are not really political. That's why I've got political aside. It's just looking at the Trump situation and saying, right, this apparently or ostensibly is not business as usual. And so people that kind of were maybe thinking, hey, Trump's going to try to pump up the market like he used to do with his tweets the first time around, or Trump's going to really be cognizant of that and not want to see it go down. Trump is going to really help business. All of that, some of that's not happening, and some of it might still be true, but it seems like Trump out of the gates here is doing things that upset the Washington apple cart. And that's obviously related to Wall Street. I mean, some people would argue that Wall Street's effectively managing what happens in DC. So it all has its own sort of network, if you will. And so with these things really not working the way they have for so long, in other words, maybe DC not being as supportive of Wall Street in certain ways, or what Wall Street prefers in certain ways, you've got this disruptive factor that maybe is more disruptive than was anticipated by a lot of folks, or maybe they're just using the some of the disruptive things that are occurring with the tariffs and so forth as cover to sell the market off. Whatever the case may be, that's the simple message I'm trying to convey there. But yeah, I'm going to make the case, a few different cases. And one thing I would say about the bear side is the lack of lift from being bombed out and still relatively poor breadth, where you're not really screaming back and things are maybe rolling over again from a breadth perspective after being so bombed out. Just has to concern you, I think. And remember, I would say a lot of good things have happened so far, in the sense of, if you're a bull, that hey, a lot of these really typical things that you see with AAII, CNN, fear, greed, that type of stuff, the psychology of the market, new shorts coming in, the capitulation, false breakdowns, maybe bear traps, they're letting people buy the dip, right? Basically, they're letting you have as much as you want. So whatever you want in terms of, you're getting your fill, right? If you want a lot of stock here, you're getting your fill. So, and I would say that even I thought we'd try to get to the underside of the 200 and have a better week than we did. It still may happen, but we haven't even gotten there. It's taken this long, and we still aren't there on the SPY. So, with all this, it's gone down, so to speak. There just hasn't been that bull trampoline, and usually after a very steep kind of relentless sell-off, we've been treated to kind of V recoveries in the modern market. I would say in the last, say, 15 to 20 years, a lot more. There's actually been studies done on this, a lot more than ever really transpired prior in prior decades or going back in market history. So it's almost like, where's the other half of the V, right? There could still be more of a double bottom W type thing, but we might get that, but the V just hasn't happened where you yet. I don't know if it can because we just it just may, but we'll see. But yeah, you're not getting that bullish trampoline. So let's stop the share. We're going to briefly reposition to let me get this out of our way. Let me share. Let me see what if it lets me get screen two, and then I'll take this down here, and we should have. I believe we're going to have our charts behind us. No, somehow it still gave me PowerPoint. That's so weird how it does that. I don't know why it's got that on the same screen. Okay, there. Okay, so what I did is I loaded up the Mag 7. And what I was thinking last week was that this is held and there's been a lot of on the individual issues here. There'd been a lot of damage done, and there was a lot of potentially clean out of below the 200, which is the purple SMA right there that I'm highlighting. And so that's what I was thinking we could start to see more from it, and that would help lead things back up. Now, this doesn't look bad, right? I think in a way this looks pretty good, but this was kind of a cheesy close. But remember, the close is the close, and that's probably your most of all your data points that occurred during the day. I would say if you had to pick between the open, high, low, and close, I would probably pick the close as the most important one, and I think a lot of people would agree with that. But it's right below the 150 SMA in Rust, so you're trapped between the 150 and the 200, but your shorter SMAs, you're already above the 10 and 15, and all you've got really left here is the 20. Now, if you get through the 20 on the Mag 7, I think that opens you up, right, for to sort of move back up towards the 100 and the 50 respectively. So it's close, but the 20 is probably your level. I know you may not be trading this, but if you want to keep an eye on it because you think it's important, that may be a point worth noting right there. So if they get that going, right, this obviously these heavyweights really help the market. But to get into really the theme of the week, let's establish that with the spiders, which is our proxy. So you can argue this I think you can argue this both ways in different from different perspectives. And so this is pretty bad, right? That after a week where we thought coming into the week there would be a relief rally attempt that would extend. And that's Monday right there that my cursor's over. And let me just make sure we've got the right screen showing. Yeah, we do. And then you have your turnaround Tuesday, a decent Monday, turnaround Tuesday, they regroup on Thursday, Wednesday, and Thursday. They get right up to our resistance line, basically, or near the 15, or very close to both, and they just can't do anything to push through. Looks like you're on your way to some big trouble because you're making a new low for the week on Friday after failing to take out resistance and even failing to reach that 200. If I zoom in a little bit more, you can see that. So you fail to get up to that 574-ish level that we were ballparking would be a good area. The highest you got to really get back to and see what happens. So you get to about 571, excuse me. So you fall 0.5% shy. So the argument could be made, right, that this is not good because you had your shot. You couldn't even get to where probably realistically you should have been able to muster a little bit more, and breadth was not very good, right? And there were really not great developments in the sectors, which will flash. So you could argue that angle, and you could say that right now, right, you actually created a new low, and that's definitely concerning. But notice this sort of reversal candle, if you will, from a gap lower, right? They gap it down, and then they get started really lifting it up. It wasn't really doing all that well until late in the day, and that's when they put that burst together to improve the close. So if you want to look at the half full side of this, right, this is potentially a higher low here versus here, and you are right near resistance right here, and on our line, which I think that line has proven itself. and that you just need a little bit of advancement, on Monday to get started, and you'll be right near attacking the downsloping 20 in light blue. You won't be all that far from the 200. You'll be near these highs that really end this open here and the low there, right? So there's a lot of stuff kind of bunching up near the 571, the 574. And so that range between 571, 574 to me looks like a really important level to me, right on this basic nuts and bolts charting that we're doing. And that would lead to, I think, getting at least another percent, right? That you would be able to retrace a little bit more and you'd be able to get near the 150 there in rust. So that would probably be the next step. But the other side of this argument would be that, yes, you recovered, it was cheesy, but you're really risking things turning ugly on a monthly basis where, March has been not really disastrous, but it's been pretty bad, right? You start out here at the end of Feb, and you come down here, and so far this is all you've mustered. So a lot of folks are going to say, right, we'll just trace over it. They're going to say, down, right, downtrending action. So there's a leg. Here's your correction of that leg. And since you haven't done much, that means, right, that there's not enough buying uh, power, right? That's really stepped in yet. And if you have this kind of weak rally attempt, which you have, I think so far, you start going down again. There's going to be another ugly, more than likely, there'll be another ugly leg lower. So we talked about this on Cocktail Hour a few weeks back, and a lot of us agreed that this was probably the most likely scenario. And you know me, I'm not really big on. I really prefer, since we focus on short-term trading in most of our services, I really prefer not to get too far out there on what you think will happen, down the road, 5 or 6 moves down the road, because a lot can change. In the end maybe things do play out the way you think or the way good forecasts would have it. But a lot of times they really throw you curveballs along the way, and if you've got things sort of set in your mind, it can work. I think it can work against you in short-term trading. So that's the real reason why I don't like to do that, because you're all, in my opinion, right, you're always revising when there's new market information, and you do the best you can to adapt as the price action unfolds and the feedback that you get from the market through different things we look at, right? Behaviors within the market. So that's what I prefer. I think it keeps you nimble and it keeps you from getting in big trouble, and it keeps you consistently successful. Just a quick summary or synopsis there. So that's the next problem, right? If you make this lower low and now you start another leg lower, this goes really low. We talked about that a few weeks ago, so I'm not really going to go into this, but this feeble sort of relief rally to this point after really that type of descent, that would argue that you have another, say, 10% from 571. It's going to put you down, into the 5, and I think we talked about this near 510 or 511. So that's going to put you down there. It's going to be pretty ugly should that happen. And I'm not forecasting that. I'm just throwing that out there. So just just that's why this is a big deal, I think, where what you're coming into here. If the reason would, but why, right, is that you start breaking this low and then you didn't even make it. It looks like a very weak rally attempt with poor breadth, poor sector action, poor leadership from the big dogs. Yeah, the big dog Mag 7 is held up, but it's not really roaring back. And so that's part of my argument that they're letting you buy this dip. Before, right, they would just sort of like put a dip together, like this little mini dip, and then they'd be right back at it. And if you didn't get aggressive when you should, which I can make arguments why you need to get aggressive in here, technically, if you kept waiting for another little bit of a pullback, you just didn't get it, right? They put a really good run together. That's what they do quite often in bull markets, right? So it's not acting bullish. I mean, it's corrective right now. So we know that, and that's part of the problem is that people that are technically oriented are not seeing good action yet. They want to participate in. And I'm not someone that just discards seasonality. and I know that seasonally we should probably start to see improvements, but we're not seeing it yet. And I'm not going to be beholden to seasonality in the end. I can't just say, well, seasonality says this, I'm sticking with it. I'm going to be beholden to the price action as it unfolds and trying again to read what the market or listen to what the market's telling us, see what the market's telling us. And right now, I still think that's undecided. So if you look at it on a slightly bigger picture, like a weekly, you're seeing right there's your 50 week, which is similar, obviously, to your 200 SMA. And you kind of have this indecisive situation developed candle wise on the weekly, and you're below the 50 week. And as we said before, there's really a big space down. I'm not saying there isn't any support. I'm just saying there's a big space down. And if this is all they muster, in terms of a relief rally, that's kind of weak and pathetic, right? That you were only able to go from here to here, not even a 38.2% retracement yet. So if that just starts rolling over, remember, if you start attacking the lows, there's probably going to be some panic at that point because people are going to be like, whoa, this is already, we're already back at these lows, but that's kind of what happens. And things get ugly. That's where it could get ugly, but you have to also realize that if they were to take a week or two and bring it back down here and even put a slightly lower low together, they're the masters of the final flush out and being more patient than a lot of traders are. And so if they were to do that, right, you still have to be on guard if there's no continuation. So again, false breakdown risk is real, and I always try to mention that if because I have to assume that there's some newer folks that have joined Market Rebellion that haven't been through this stuff as much as a lot of us have, and I just want them to be cognizant of that. You really don't want to do the Ralph Cramden and start ordering the motorboat with three propellers just because you have a few ticks below this low, right? You really want to still be on the edge of your seat, really managing things properly, and just always remember that you can always get back in, right? If you start seeing them play games on you, maybe you need to just clean that up and then kind of neutralize and then kind of spend some time watching it all over again, get ready, formulate your trade of how you'll go back in, and be ready to do it. But you don't necessarily have to keep it on at all times. Plus, right, developments could come into the market and help you decide whether you want to stay in or not. If you see some positive developments that are actually having a positive effect on price action in the market, that might tell you, right, it's probably prudent to hedge or maybe even close right at this point. And I think you get the general idea. But yeah, I mean, that's looking pretty bad. That's a real break. We can't give up on the trend completely yet, even though we are below the 200. I think it would be premature to do that. But this could very easily turn bullish because, and a lot of you know this, that I like this scenario where you roll over from resistance. You don't really fall too far. And at this point with the close, you're not far away from our resistance line that you can see there in purple. So it really wouldn't take much to pierce that and be moved beyond that form of resistance. So we wouldn't be expending energy. Like even though you're looking at this as a green candle, remember, this took a lot of the short-term buying, maybe pressure. It took it out of the market early, and then it was still taking it out of the market. A lot of that buying pressure wasn't really developing, and they put that burst together. But this almost is like a refresher type candle where there was enough selling probably from the high on Wednesday to the low on Friday. There's probably enough selling over that course of time right there to justify a nice little attempt. So that's why I'm saying you can make the attempt. I mean, you could make the argument both ways. Now, what I want to bring in at this point is just to show how, because I think this is really the whole important part of this week is right that you don't get too far over your skis. I think I can get another 10 or 15 cliches in before we wrap up, by the way, if you're trying to keep account for the record. But this is our spies. Remember, these basic breadth indicators that we typically take a glance at. These are, looks like my cumulative volume is not, I don't know, is that, maybe it's just the scaling. I can't see if there's an issue there or they're scaling. I just noticed that. I just glanced at it earlier and I was really mainly looking at some other things, but this is sort of right? This attempt to rally here with the McClellan oscillator, this is not really that impressive, right? Where you get this nice burst, but the way that things finished up, it's definitely kind of got that lower high double topish look. It's not recovering the way we had and continuing up. You're really close. I think you may have actually made a lower low than where you were earlier in the week. So it looks like there you were at 11.51, and it looks like here on Friday you were at, where are you there? 1.86, it's saying. So yeah, you 11.51 versus 1.86. So yeah, you did decline by week's end. It's just tough to see because I've got things bunched up. But you can see the new high attempts are, I mean, new high developments are very weak right now. But you could say, well, the new lows aren't all that bad either. I would agree with that. It's just that overall, you can see that things are basically rolling over again despite Friday's late day shenanigans. So you're coming into the week with breadth not really looking all that great the way that it finished up, even though they kind of put the lipstick on the market on Friday. So that's kind of the counterbalance to you could very easily turn bullish and take resistance out, and you could be on your way to another leg higher. So that's why I'm basically arriving where I am, which is right, just trade what you see. To quote our friend and partner Greg McDermott, right, just trade what you see. Greg talks about that a lot in the pit, where you just don't want to get yourself confused with this, that, and the other forecasts, and really be beholden to forecasts when you really have to. All you can really deal with is the price action anyway. So deal with it, right? That's what you have to do as a short-term trader. So anyway, there's the SPY against the breadth right there, and just not a really pretty breadth situation. Let me move that out of the way, and we'll take a quick glance at the sectors. And the sectors are really not that wonderful, right? I'm going to point it out that I think energy is sort of becoming a little bit of its own story, a little bit for different reasons. And so that's been doing better. I don't even know because I've been busy with so many things that I don't even know how our trades have been doing. We had some bullish trades in there. I think they probably have done well, but I haven't even had time to check them because I've been just looking at so many different other things. XLK was on its way to a poor week before they pulled that off on Friday. It wasn't a stellar week, but I mean, these are the important areas, right? In our minds, this and SMH and things like that. And these were on their way to not such a wonderful week. And then they put the sort of Friday scamper together. So the good signs are that energy's doing better. XLK and XLC didn't fall apart, and they managed to eke out, right, something respectable, we'll call it. But still, your leaders aren't really leading you back up yet. And these have been the big leadership areas most of the time over the course of the bull market that we've been in for a few years. Now, XLF, which I consider important, and it may be, even more important these days for different reasons, this did have a good week. I had a few ideas go in there. I would assume that those ideas at least put some kind of a pop together. I don't even recall if they did at this point. XLRE, kind of a blah week. XLV, kind of a blah week. These are defensive, the way that we look at them typically. And so they're kind of blah, right? So that doesn't really tell us much other than people didn't reach for defense. But I think when you keep going back to here, the lack of recovery, it's good that XLY down here sort of is trying to bottom, but it just can't get its mojo back and start to, again, lift. And remember, when you get these really deep rollovers that really are almost relentless and somewhat vertical, we talk about the trampoline effect that, right, a big, heavy drop like that should give you a good springboard to go. Just like you'll often see, really bad times will be followed by good times in the market because there's a recovery, right? Because in the short run, there's been maybe an overdone push one way or the other. In this case, bearish, and then the bulls come roaring back. But they haven't done that yet. You're teetering, the word of the week, right? If anyone knows where that reference is, I'll give you extra credit. I'll send you a chocolate bar or something like that. But if you know where that reference is from, you're pretty good. Um, the You get maybe a double bottom here in XLP, but remember this is staples, this is defensive, it's hanging in there, but it was doing really well. But when the whole market went risk off, it started falling apart, joined up with XLY. Transportation, right? This was having a really bad week, getting towards the lowest lows we've seen in a while. They've sort of reversed that. Now, does this Friday shenanigans, do they do they hold? Is this indicative of something that's about to change? And it could be. Like I said, I think you're coming to that point because you've got the end of the month. You've got the end of the month and you've got the end of the first quarter here. So, I would say there's probably normally a bias to try to want to mark stocks up, and especially if they're in danger, save them, right? And they are in danger, in my opinion. So XLI and XLB, basic materials and industrials, these were doing better for a while, but they're again kind of in nothing special mode. And I know that the metals have been lifting, and I'll show you one stock that we had some UOA, and I'll even check finally to see what it did. But I've been kind of saying, right, I really don't even know how to interpret the XLU these days because you've got all that, you've got the defensive history of the XLU, but you've also got the new thing about, all the stuff we talk about, the data centers, blah, 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 Bitcoin, crypto, the whole rest of it. So, in terms of the whole summary on these sectors, at least, at this point, you still can't be impressed. And there's really nothing here that should, I think, really impress us because we just haven't seen enough data. So that kind of adds to the because you're near critical junctures and you're still below your 200 in the SPY, you've got to be very defensive because the rally's been weak. Sectors are not really showing you anything positive yet on balance. You've got a couple of outliers here and there. So you have to wait a little longer. Again, trade what you see. I think you're just waiting to see the next move and you're not forcing it yet. If you've got something else that you really love. I mean, there are some good signs where some short-term charts are starting to turn a little bit, but they're not, that's not nearly as reliable. I look at the larger time frames as being more reliable and more persistent and having more power to last longer, obviously, over time. But the thing is, right, the turn in the market is going to be seen on the 1 minute before it's seen on the monthly and things like that. So, that is what it is, but let's take a look at the SMH since it is an important sector. And this is right, you're well below all your long-term SMAs here on the daily. You've got this rollover happening, but they did save it on Friday, like everything else. And bulls and half full are going to say, well, you have the potential for a higher low to be put in. And if you break right through that 20 and then follow through on Wednesday's high, you're on your way to big stuff. I would agree with that. Right. Other half empty folks are going to say, if you roll over here, you're on your way to a retest. And I'm just going to say, probably are. So if they can't, here's the thing, if they can't really muster anything really good, and I think this still looks worrisome. So I don't want to make that clear. But if they can't muster anything good when their monthly charts are at risk, when when you're at the end of the month, when you're at the end of the first quarter, not good, right? So you add that to breadth and you're like, uh-oh, that's not really looking that great. Now, as many of you know, let's do gold. Well, actually it's GLD, sorry. So here's gold. As many of you probably know, gold has been making new highs. And the some of the other things that are related to it that have some exposure and other types of sort of materials and mining operations have as well. So we recently had some good stuff happen. I don't know how much this ran. I do think it got an upgrade. So um, where was that? Yep, so they did raise it. That's right. So there you go. That was Friday, and they did get JP Morgan. And I know there's copper involved here, and copper we haven't looked at in a long time, but copper's been on fire, which I won't even go into because we're already running really long. But this is what happens. It's not that I don't find it that easy to discuss all this stuff without talking about other things. But this is a good start. This is bucking the trend. So what I would say is if they do start to put something together, you may want to look at FCX and you may want to look at some other similar names, right? Because these materials may be making a comeback early here, or at least they're decent areas that are already acting well that may continue to act well if they start to save this market. So that's just a brief mention on that. But it's not in everything across the board. You have to be pretty selective, I think, on what you're looking at there. But we also have seen some other miners uh, with some paper, and that would be things like right Newmont. We have seen other names that are not necessarily top tier. I don't even want to go into those, but the point is that the gold area, I think it's probably a little overdone in this stuff and probably needs to just pull back a little bit first, personally. But maybe it's still on its way to doing that. But we'll see. We'll see on that. But some of that is worth keeping an eye on. And silver, I'm going to give the periodic reminder on because silver has that long-term sort of cup and handle that we've been tracking for years at this point, that we've been talking about. And it's really above, right, the rim or top of the cup, if you will, in my book. And you can see that it's on the cusp. So maybe you need to see a pullback first. Remember, this is a very tough area to trade in. There's a lot of hyper manipulation that goes on here. You can research that if you think that's an overstatement. I think pretty quickly you'll find out it's not, but because there's been prosecutions and admittances, and it happens in different countries and so on and so forth. But anyway, yeah, so you've got this cup, you've got this handle if you want to go there, and you kind of got this inverted head and shoulders within the handle. There's all kinds of stuff happening pattern wise, I think, here. But yeah, this thing is close, and once it goes, you can get a really strong burst like back in here, and you can see how that was fairly relentless, and really just within less than a year you nearly tripled from where you were. So give you an idea. So I think there's some real potential in there just to keep on your radar for the long term. So I wanted to mention that. They've got the VIX backing off to a critical level, right? It's right back down towards, let's go back to the where's our, no, we don't want weekly, dummy. We want daily. So they back the VIX down right towards that 20 level. And some are going to say, well, that means it's over, right? It could be over, but I would say you just keep your eyes on this still. If this starts to lift back up again, and that might be a telling sign. If you see this really up, that could be that there's really an anticipation. Should we have a retest of the lows developing, that this could really turn into another leg. That's just my quick mention on that I wanted to throw together. Um, and then I wanted to quickly talk about the dollar, and we'll talk about yields. And the dollar maybe is double bottoming here, the DXY. So that could be a little bit of lift here. The dollar's obviously gotten hit pretty hard with what's happened with Trump, and I guess money leaving here and going abroad or repatriating to different places. But this looks like it's going to try to lift back up. Remember, the market struggled as the dollar struggled. That hasn't really always been the case. A lot of times when the dollar and yields are moving back up again, that'll hurt the market, but it hasn't in this case. But that's got a little bit of a double bottomed, I noticed this week when I was taking a look at it. And then yields are also hanging in there for now, despite what the Fed had to say. They're still hanging in there. So that's that on those. I'll go back to the Qs and the other major index ETFs, and then we'll just kind of wrap things up. But if you look at this daily chart, right, you have to like that you're getting improvement here, but you are obviously still well below your 200 there in purple, and this hasn't even gotten as close as the spiders, and you've got declining short-term SMAs that are coming in, creating problems as we talked about a few weeks ago. And you can see the 15 in red seemed to be a problem on Wednesday and Thursday, and even got close really on Friday. So again, I would say run that 15, and once you get used to even another line on your charts, it won't bother you. But a lot of times it ends up being, I think, just like the 150, it ends up mattering here and there, and you just kind of want to know about it. It's really not that obtrusive on it once you get used to it. But look, there's some good things happening there. And I think you're very close to the kind of flat line resistance at 485. So you just need 1%. Then you got to get to the 20, then you've got to get to the 200. So it's got its work cut out for it. But if you were to start lifting from here, you'd have this sort of right higher low in place, and you've got this improvement happening. So that would be a good sign, and you'd start feeling a little bit better, especially if you can close above it, and maybe you get that sort of improvement by the end of the month to save things. But right, if we look at this, we know how fast the Qs can move, and you're only 3% away from your lowest low. So it's getting really important for this thing to break out while it has a chance, because if they get more weakness, you could very easily be back in retest mode. You could maybe get real breakdown, false breakdown, double bottom, even slightly higher low. There's a lot of things that can happen. We talk about them almost every time we're in this type of scenario. But uh, it's doing a little bit better. You have to like that it did bide some time this week, did not fall. So again, there's the half full. The half empty is that if you could buy as much of these things if you wanted as you wanted to, and they let you have it. And normally, when they're about to put something together, it's hard to get your hands on, much harder to get your hands on stock. They haven't made it that way. So I hate to be so, uh, I guess, come across as being wishy-washy or whatever, but this is how I see it, and that's all I can do is show up every week with whatever energy I've got left and try to put something together that maybe can help you to think about things if you're new and maybe get some value out of it. And the same thing can really be said at IWM. I mean, if you're bearish, uh, I can understand that you think it's rolling over from the recent high and it's on its way back down. At the same time, it's holding right in what appears to be near support area. It held, and with one little push, it could be taking out the highs, taking out the 20, and opening up more space for itself to move higher. So I think you have to just be in flux here. Maybe the expiration artificially on Friday artificially contributed to shenanigans where they push things late and it looked better than, and it'll all just come right back out on Monday. We don't know what news is going to come out on Monday, but the bottom line is that I really do. I think a case can be made right now that with just whatever the next tell is, right, whether they hold and try to go or they roll back over, you got to trade it that way, right? That you're really looking at it as a fork in the road, and you're willing to jump on, because I do think you're approaching where you should get something one way or the other. And it might take until, if they fail, it might take until the following week, right, where you get even more downside. I don't know. Remember that they'll start getting fresh money coming into the market at the start of the month. And so if they do manage to hold it and just sort of double bottom it this week, then they might have some new capital coming in that could give it at least a little bit of a boost, at least for a few days, few sessions. So that's something else to think about. But with the VIX not completely backing off, people still holding it near 20, all the rest of it, the breadth not being impressive, them letting you have as much stock, but they're in a position where just with a nice little session or two, they could have bears back on the run, and bears are their own worst enemy, even in bear markets, because you get such a scramble effect. And this almost every rally, of course, is a false rally that's mainly really a short squeeze where people that are short regret not covering lower. And then when the pain gets too high and a lot of the profits that built up start to disappear or dissipate, then they scramble and drive it, even higher because of the frustration. I mean, it just happens. So it is what it is. So on that note, I think I'm going to wrap up. I do hope that something I share with you in this sort of non-committal week helps you in some way this upcoming week, or some week in the future. And I do want to thank everyone for tuning in, and we'll just do the best we can, just like I did here this morning. I tried the best I could with what I've got left in the tank, which is not a lot. So again, I hope it helped out, and thanks for tuning in. Everyone have a great conclusion of their weekend, and be smart this week ahead. Wait until they show you the whites of their eyes.